Okay, so this is the answer to the next strategy 1 trade. Let's look at the chart in question. So with this chart, we first want to identify the trends. Look at the trends. Is the price going up? Are the MAs going up? Are the MAs going down? And in accordance to that, we want to be looking at a suitable ABCD trade. So pause the video and find the trade. So the trade that is going to be looked at here is this ABCD here. So we've got a nice ABCD. AB is equal to CD. And here we've got a long trade. We've got the MAs generally up, going up, and price is generally trending up, and you can't tell so much with price here. It may look like it's going sideways, but the MAs are telling us that the averages are all pointing in the same direction, especially with the 200 MA being way lower down here and the 50 being above the 200 and trending up. Now you get a bit of fluctuation between the 10 and 20 moving averages, but we see that the general trend is up because of the 50 and 200 pointing upwards. So we are looking at a long trade here. And where are you going to be entering? Well, as with all the other trades, we are going to be entering at the 25% mark. Now 25% of the A to B move, obviously from point C, that's where we're going to be entering. And what about our stop? Our stop is going to be below point C. And what about moving our stop to break even? At what price would that be? You can pause the video or we can just go through it now. Well, the break even is going to be at the 50% mark. The 50% mark from point C. So 50% of A to B coming up from point C is this price here. And when price reaches there, that is where we're going to be moving our stop from here up to the entry price. So if price ever comes back down from that point here, if it comes down, we are going to be coming out of break even because we enter and exit at the same price, meaning that we don't lose anything. So what about our exit? Well, this is a strategy 1 trade, so we will be exiting at point D. We're selling there because obviously this was a long trade. We bought first, now we're selling. And what about our risk reward? Well, again, strategy 1 trades are all fixed risk reward because we're entering at fixed points. And we're always going to be entering at the 25% mark. We're always going to be exiting at the 100% mark, which is the D point. And we're always going to be putting our stop below point C. So the entry and the stop have 25% in it. And the entry to the exit has 75%. So our risk reward is always going to be 3-to-1 with strategy 1 trades. So that was that example. I really do hope by going through all these examples, I'm really drilling this strategy into your head. It should become second nature. As you practice more and more, you're going to be able to trade this strategy in your sleep. So what I do advise here is that go over all the examples again, make sure you fully understand them, make sure you're always pausing before I tell you the answer so you can identify the answer first, work it out by yourself, and then see whether you got it right or not. Go through all the examples and make sure you do that. Once you've done that, just click over to the next page to continue with the module.